Thank you, Mr. Chairman, and thank you for being here today. I'm a small business owner from Texas. I'm a Main Street guy. I'm a car dealer, one of your favorites. And I can tell you, small business is hurting. Main Street America is hurting, and it's hurting because regulations, which you have talked about today, are literally choking the heart out of small business. And I think, too, that we talked earlier about inequalities. And I would say that competition is the key. Competition in business takes care of inequalities, not the federal government. And my colleague here just was asking for an expert opinion on whether Dodd-Frank and CFPB are good for the economy. I can tell you as an expert opinion, they're bad for the economy, the worst. Now, with that being said, in 2014, in comments before the Joint Economic Committee, and I'll be somewhat repetition here, but I think it's important that we remind you where we need to head our economy, that you stated in questioning from Senator Coates, I quote, "My own discussions with businesses, I hear exactly the same things that you are citing. Concerns with the regulations, about taxation, about uncertainty, about fiscal policy." You went on to say there is more work to do to put fiscal policy on a sustainable course. That progress has been made over the last several years in bringing down deficits in the short term, but that a combination of demographics, the structure of entitlement programs, and historic trends in health care costs, we can see that over the long term, deficits will rise to unsustainable levels relative to the economy. Now, my constituents back home in Texas are very concerned about the health of our economy because it is not good. And in Texas, we got great things going, but it still can be better. In Texas, a state that has somewhat recovered since 2008, you have 115 fewer community banks, you have 105 fewer credit unions, tons of consolidation, and a lot of uncertainty about where the economy is headed. So my question, Chair Yellen, what do you say to those community-based institutions that former FDIC Chair Bernanke characterized as saying we're being penalized, and you touched on this today, by your policies, particularly when these policies have at the same time failed to produce meaningful economic growth in the communities those institutions serve, which further erodes their profitability?
Well, what I've said is we're trying to do everything we possibly can to relieve burdens on community banks. They've been through very difficult times. First of all, a period that's been very rough for the economy and a slow recovery, and that's taken a toll on their profitability and that of the businesses, as you noted. And in a low interest rate environment, net margins tend to be low. Now, I think that the low interest rate environment we've had and accommodative monetary policies have served to help our economy overall and get it moving and moving back to full employment. If you compare the United States with any number of other economies that also suffered in the aftermath of the crisis, we're among the leaders in terms of how we're doing economically, and other countries are now pursuing the same kinds of monetary policies that we put into place earlier, which in a way is an endorsement of their effectiveness.
Well, it still is very hard to borrow money for small businesses, and I can tell you banks, as you've probably heard this too, are having to hire more compliance officers than there are loan officers. That takes money out of the system that could be loaned to people like me to hire people and create jobs. And, you know, we had Cordray here before us, and I asked him if he would slow down this Dodd-Frank legislation because a lot of it is not completed, and because we're losing so many banks and credit unions. And he said, no, we're going to go 100%. We're going to take a look at it. That is a bad policy. Now, you stated that the community banks shouldn't face the same scrutiny as bigger banks. You said that today, and I agree, and that the Fed will tailor its supervision to reduce regulatory burden. I heard you say in 2014, I heard you say that you said I had community bankers in my, or just yesterday, from what you said, and I heard today from community bankers asking me, what do I do? We say the right thing, but what do we do? They're fearful of things that can happen, of what they may not do. So they don't know what to do. What would you tell these people? I mean, we talk a good game, but we don't come through.
Well, we're trying to make clear our supervisory expectations and work carefully with them to know what rules and regulations apply and how, and what don't, and to try to shield them from many of the things that larger banks have to.
Well, it's
have
very
to
vague,
comply
and
with.
I hope you'll understand.
Time-
Mr.
time-
Chairman, I yield back.
Time of the gentleman has expired. Chair now recognizes the gentleman from Maine, Mr. Pollock.